Hey everybody, it is Sunday, April 22nd, 2018, and this is a video for the S&P 500. We're taking a look at the roadmap that I update daily and pin to my public Twitter account at KiwiTrader24. These videos I'm just going to do and post to the private account. For now, anyway. Okay, so we're looking at the S&P 500 daily roadmap, and let's take a look at what happened on Friday and this week in general. And if we backtrack all the way to the previous Friday, you can see that we had a very similar day last Friday, and then the Friday before that, though the candle was different, the results were the same. In fact, they were worse because we opened here, we rallied up and then gave it all back before the end of the day. So we've had a bad set of 3 Fridays in a row here. People aren't looking to stay long over the weekend. Maybe because the President of the United States can't seem to stay off Twitter on the weekends, no matter, even if it's somebody's funeral, like, that of a sitting president's wife. And his own wife is down there at that funeral. He can't seem to stay off Twitter talking about himself and his conspiracy theories. So who wants to be long that, and who knows what kind of thing he's going to start up. So that's the way things have been going. So anyway, keeping the politics out of it, what happened on Friday and what happened all last week is this. Okay, the previous Friday we had this nasty sell-off. We were going into that Comey interview with George Stephanopoulos, and people just didn't want to be long ahead of that in case some kind of constitutional crisis is born out of that. Well, then, since that was a big nothing burger for most people, we came in on Monday, we gapped up open, and we rallied up, stopping dead on the 50-day simple moving average, and then lo and behold, sort of selling off into the close, and giving back about half the day's range. Well, here's the thing that was going on underneath the hood. As far as our simple moving averages were going, on Monday of this week, we saw the 20-day simple moving average tick to a flat line after being descending, and then all of a sudden it went straight sideways, which means that finally the average closing price of the last 20 sessions or 4 weeks of trading has suddenly stopped descending and finally went flat. That's an important piece of criteria that goes out to the algos that are trading on a program basis. We've had a rising 10-day that's this blue line here that's been rising up for several sessions now, and it was meeting for a kiss on Monday with the 20-day simple moving average. When the 10-day simple moving average crosses the 20-day, that sends out a buy signal unless it is specifically programmed to treat it as an overbought signal. Then sometimes we see a sell program kick in to fend it off. But in this case, no, it was treated at face value, what it is, and that's a short-term buy signal. And you know what? Thinkorswim does not like it when I'm running QuickTime at the same time as this. There's obviously some competing cookies. But in any case, I'll keep this going here. We came in on Tuesday with this huge gap up open. I remember watching the futures overnight, in fact, on Tuesday, and seeing this 50-day simple moving average get taken out in terms of what it translated to on ES, and it just started to ramp the futures, and we had this huge gap up open on Tuesday. And lo and behold, when you look down here under the hood, look at this. You had this huge bull cross pull through with the simple moving averages. And this buy program, they gapped it up over the 50-day because what you can't do in the light of the day, you do in the dark with the futures overnight. And that they did. They made sure to stick this advance from the futures on the open on Tuesday, and we gapped up open over the 50-day simple moving average, and we took it all the way up here to the midpoint of this new little accelerated channel that we're in off of the April low. We came right up here to this center point and sort of stopped and kind of gave back some of the gains on the day from there. And then lo and behold, on Wednesday for OPEX for both S&P 500 and SPY, they both have a Wednesday expiration. We came in and we made a higher high over Tuesday, but we gave back more than half the day's gains. Now, I got caught in this. I was sure, based on all these signals going on under the hood, the fact that the 50-day happened to tick up on Wednesday. The 10-day had crossed up through the 20-day, and we had just taken out the 50-day simple moving average. I thought for sure that this was just a scheme to crush people out of their options on Wednesday expiration, to deny the call holders who were buying a lotto for a run on Wednesday, and to fake some people out of their Friday expiration calls as well for monthly OPEX. I thought for sure this was just a cleansing of the palate and that we were headed for a 2750 the next day. I thought for sure that's what was going to happen on Thursday based on all the other things that I saw going on with the chart. But no, something happened overnight with the futures, and we ended up with a gap down open on Thursday, and that was it. That was it for me because I had a couple of bad trades already. I was already operating on fumes as far as my funds went, and sure enough, this killed me. This is what nailed my coffin shut for me. Was this gap down open on Thursday. And it cleaned me out. It cleaned out lots of people. I mean, look at this. We broke down through the 50-day, cleared a whole bunch of stops, reaching all the way into this, towards this gap fill back to Monday's open, but didn't quite fill the gap. And of course, turned around and reeled it back on up and brought back so much of the levels from the day, closing well back above the 50-day simple moving average, and holding out a tiny little bit of hope overnight for people that were, holding for monthly OPEX that we would maybe open above 2,700 and take a run on Friday. But no, that didn't happen. We opened on Friday. We worked our way a tiny bit into the range from Thursday, and of course, just had a miserable, bloody day. I was out of the box already. As of Thursday, I was done. So I was just watching from the sidelines on Friday. And what I saw was, the 50-day simple moving average broke. And then once the previous day's low broke, we doubled down on the day. And our low of the day actually ended up settling on this, the bottom of this channel, this uptrend for the quarter. And it sat there until the beginning of the final hour of trading. And then, boom, they broke down through that, breaking the 10-day simple moving average, and working down towards maybe filling this gap to last Friday's close down at the Friday the 13th gap. Well, they stopped that short and screwed everybody there too, and brought it back up to close back above the 10-day simple moving average. So, boy, they really had their fun this week. They really are trying to get rid of people out of this market. Well, one thing that I've learned, one of the most useful things I've learned over the years is something that Art Cashin has taught us, and that is that sell-offs that start on a Thursday usually follow through on a Friday. They crescendo on a Monday, and you usually see some buyers start to pick through the rubble Monday afternoon, or they really press it on lower and close on the lows on Monday because people are being margined out of their positions. And then on Tuesday, they come back and we start a buy program from there. But you usually don't want to see the buy program start on a Friday because it's usually just a short squeeze, and it usually gets given back on Monday, Tuesday. So anyway, we are so far set up to follow through with this kind of a setup because we started our sell-off on Thursday, we continued it on Friday, and if we continue on Monday, then what we'll end up seeing is a break once again of this 10-day simple moving average, and we're going to go down and we're going to challenge the 20-day. If the 20-day simple moving average breaks, as long as we still hold above the 2635 level for the low, I think that we're going to be good to go, and we're going to end up getting a rally out of it. 2635 is the halfway back point for April and for Q2 because we're only less than a month into the second quarter right now. There's a gap support over here that's over here from I think that's the 10th. Yeah, the low of the day on the 10th, which was the Monday of the previous week after we had this horrendous Friday. We gapped up open on Monday. And we really don't want to see that low go down, because, that's going to end up ruining this nice little uptrend that we've got going on the 20-day. It's going to end up flattening out the 10-day, and it's going to cut us off from this 10 and 50-day simple moving average cross, which, if you thought this was a bullish strong buy signal, this will be an even stronger one when the 10-day crosses the 50-day. So if this is just a mean-spirited clearing out of people out of this market, then all that we're going to do is head down to 26.35, and that's going to be that. If there is something far further wrong underneath this market, if there is a fund or two blowing up that we don't know about yet, then we are going to be heading lower than 26.35. We're going to head down to the 200-day simple moving average, all the way down here at 26.05. Now, I'm not saying that this is going to happen on Monday. I'm saying that if we break the 20-day and we break 26.35 and we close down here underneath the 20-day and underneath 26.35, I think that we might have some more serious selling in store for us. We might even double the whole system on down from where we got to last week for a high to a break of the 20-day. And if we doubled that down, you can see from here to here, if we doubled that, it's going to be more than a break of the 200-day simple moving average. We're going to be looking at, dipping well down into the 2,500 handle again. One other thing I want to caution you to as well is that look at where the 200-day simple moving average is right now. It's at 26.05. To go back test our low now for 2018 back at 25.32, we've got to make a 70-point break, 70-point plus break of the 200-day simple moving average. Now, right now, Thinkorswim isn't like really cooperating with my QuickTime movie software that I'm using right now. So for me to shrink the chart down and show this to you isn't going to work very well, but you can go look at it yourself. The low for 2018, that February low, was just a little tiny break, like what you see right here, about the equivalent of this. Was just a little tiny break, or what you saw right here at the February, whatever this was, the February 6th low. That was just a little tiny break of the 200-day simple moving average, just a little, dip your toe under, and then boom, a reaction where buyers came back in. If we are going to go all the way to back test the 2018 low now, that's going to be a serious break of the 200-day simple moving average. And there needs to be some reason that comes along with that, like a fund blowing up, like these tariffs really taking hold, like those nuclear negotiations with North Korea are all fake, and they're really planning on doing a Pearl Harbor on us or something like that, where they're going to plan some kind of like sneak attack on us where we're not looking. Something much more serious is going on under the hood with the market. So just remember that if you're sitting there thinking, well, I'm not going to do anything with this market until we back test that February low, just keep in mind that that's going to take a very serious break of the 200-day simple moving average. And if fund managers are willing to let that happen and not step in and protect that, then there really is something more serious going on underneath the hood with the market that we don't know about yet, but is coming. Okay, so I hope that this helped you and didn't confuse you there with my little rant at the end. But in any case, good luck and good trading, and I promise I will make these a little shorter and more concise as the weeks go on. See you tomorrow.